You got something none of us.
Oh, come on. Why is it always this? I mean, I fucking owe it to myself to do this or that. What if I don't want to?
No. Fuck you. You don't owe it to yourself. You owe it to me. 'Cause tomorrow I'm gonna wake up and I'll be 50. And I'll still be doing this shit. That's all right. That's fine. I mean, you're sitting on a winning lottery ticket. You're too much of a pussy to cash it in. And that's bullshit. Because I'd do fucking anything to have what you got.
Hi everybody, that's Wednesday, March 5th, 2025, and we're gonna be looking for order block model in today's day. As usual, we start from monthly time frame. You can see that price went to this consequent encroachment and rejected. On weekly time frame, you can see that price reached below this relative equal lows inside fair value gap. Then on daily, you can see beautiful relative equal lows taken over here, pink candle yesterday, and price goes lower, test this lows again. Okay, then we go lower to 4-hour time frame. On 4-hour time frame, you can see that price reached to rejection block and rejected. Lower on hourly time frame, you can see there was a fair value gap over here. So on 15 minutes time frame, you want to see the midnight opening price, then 8:30 opening price, 9:30 opening price. Then this is all of those down close candles. That's bullish order block on 15 minutes time frame. And if you are considering going long, in this case you might be looking for min threshold of that bullish order block. Why? Because there is a fair value gap, okay, and you can see price goes lower and rejects from there. Besides that, there was a relative equal lows over here, and yep, let's go down to 5-minute time frame. On 5 minutes time frame, you can see the fair value gap inside that bullish order block. Okay, price goes lower and rejects. This is the standard deviation from, I believe, 2 minutes order block. I'll be going lower and I'll show it to you. Look at that. Why is it order block? Do you see all of those higher lows? Price goes lower, right? Yes, but does it go higher to take the opening price of the order block? No, it goes lower. What about here? Here we have intermediate term high. Why? Because this swing high completely closed this SIBI, sell side imbalance, buy side inefficiency, and after that we have market structure shift. Once the price went above this swing high, you have market structure shift. But what else? Bullish order block. The opening price is violated. So once this candle open, you could be getting in. Why? Because opening price is violated, and you have clear stop loss. And if you take the highest point, the lowest point, if you project it to the upside, you can see that there is relative equal highs. And what I told you yesterday, you always want to see that your projections go together with some liquidity, and then eventually 4 standard deviations. What liquidity we're targeting here? Well, the first one that stands out, that's candle with no wick. This is very, very strong target, okay? And look what price does. Price goes there, takes that candle, retraces, and then continues higher. So this is what I say, you don't always want to wait to the highest point. Look for the low-hanging fruit objective, okay? And this would be low-hanging fruit objective. But besides that, at higher, if you were holding higher, there was relative equal highs over here, price goes there. So this is the setup for the morning session. And besides that, you want to pay attention that was macro time. What is macro time? 10 minutes before new hour and 10 minutes after new hour. That's where the algorithm oftentimes starts to spool price in one or other direction. Besides that, let me go lower and show you another trade example. Can you see this? What I showed you just now? That's flat candle. I call it flat candle. Let me go lower to 1 minute time frame. You have flat candle here, and besides that, you have pink candle liquidity up there, so we can move it higher. Once you have this high and this high, what does it create? It creates relative equal highs, okay? And then you see price goes higher and goes slower, takes opening price, and it makes it bearish order block. But there is no firewall gap, no nothing, so it's kind of scary thing to enter there, right? So look, if you go to 30-second time frame, the reason I'm going to 30-second time frame, because whenever I'm watching price, whenever I'm studying price or I'm about to trade, I will always have on my screen 3 minutes, 2 minutes, 1 minute and 30 seconds time frame. And on the other screen I have 4-hour time frame, 1-hour time frame, 15 minutes time frame and 5-minute time frame. Okay, so I pretty much see the whole liquidity matrix. So this is the bearish order block from 1 minute. Guys, take notes. What I'm telling you here, that's gold. I'm telling you. If you go to your charts, you backtest it, this is the only model you need. Alrighty, so once the opening price was violated here, do you have any fair value gaps or anything? First entry, there was fair value gap in here, but price reached that fair value gap before we took the low. So the first entry could be 3 ticks below the opening price, okay, with a stop loss 1 tick above that high, and targeting what? Targeting two standard deviations, 2 to 2.5, and besides that there was relative equal lows. Okay, so price does go to 2.5 and reverses, but if you were targeting just 2 standard deviations, that would be 1 to 2 trade. Not bad, not bad. The other possible entry option is from mean threshold of the order block. If you take the lowest point, the highest point, you go consequent encroachment, so your entry could be in here, the highest point, the lowest point, 2 standard deviations, you would be targeting these highs, and here it ups to you. But whenever you have like a flat candle like this and you have pin candle liquidity, don't try to be perfect and get out at the lowest target. Even the good entry would be even great here. Okay, if you have entry there, exit there or here, get out at the first one, because sometimes price will get to the first flat candle and then retraces like it did in this example. Okay, this is like ideal exit, but don't try to be perfect. Your goal is to make money consistently, okay, following your trading model. So on the entry, once this opening price was violated, this makes market structure shift. On this opening candle you could go in. This is 2-minute time frame. Let me see how it looked on 1-minute time frame. On 1-minute time frame it looks perfect. On 1-minute time frame you have firewall gap in there. So the entry from the firewall gap, 1 tick below this, 1 tick below this low is stop loss, targeting. This is what I say, when you have flat candle, sometimes price starts reversing from flat candle. Yes, it did go higher, but sometimes it might go all the way down back to the order block and then continue. So when you see flat candle like this, don't try to be greedy and get out if you're having multiple contracts, but let it go some proportion of your position. Okay, so if you go all the way to 2 standard deviation, that would be 1 to 3.63, and if you go 4 standard deviation, or yes, you could wait all the way to 4 standard deviation. But again, whenever you have flat candle like that, don't be greedy, get out there, because you have to remember about trailing drawdown. So that would be 1 to 6.07. So these are 2 beautiful trades for the morning session, and I don't want to even look for the afternoon, because that's Wednesday, and if you're trading using ICT concepts, you are not allowed to trade after the morning session on Wednesday. So no trading tomorrow and the day after tomorrow. And yeah, this is it, guys. Hopefully you found this insightful, and until I talk to you next time, be well, all the best, and take care. Wow, what you just learned here could change the whole approach to trading. Are you ready to take the next step? Your next big insight is just one click away.